Hello everyone, I'm Charles Brown, Portfolio Manager with CB3 Financial here in Chicago. For StockCharts TV, this is your Daily 5. Glad to have you with us. We call our segment Portfolio Management with RRG. We're a family office basically that trades here in Chicago. Our address here is on the internet, cb3financial.com. Be glad to have you join us. Sign up on YouTube, watch our weekly Thursday night shows. Pretty easy to do that. You can go to our website, cb3financial.com, click on the YouTube link at the top, and subscribe to our alerts, hit the bell, and you'll be notified whenever we go live. Let's look into this now and see what's going on. All right, so the NASDAQ as of the end of the day today, 32.5 on the year, S&P 8.7. The Dow still negative. First week in November, and the Russell has dramatically caught up to the Dow. So they're both barely, but still, reasonably concerning that they are negative for the year. We are doing considerably better in our growth program, and I'm going to tell you why. As you guys know that watch the show, we use the StockCharts platform and the RRG platform, and that's how we get to where we are. So we're up 40.7 as of 2 days ago, but if you add today in, was 5.25%. We're right at 46 and change on the year. It's been a good year, and we've done it by using the research tools available to us in StockCharts. But our show is about how to make money with StockCharts, not so much about theoreticals and technicals, although certainly those are important. But I use StockCharts to make money for my clients. So one of the things we do, those of you that have watched our program know that we use the NASDAQ 100 as our index. So our clients' portfolios track on the S&P 500, but we track our own benchmark internally on the NASDAQ because we want to set the bar as high as possible. So if you look back over 1 year, the NASDAQ up 56.35. You can see that on the left-hand side. SPY up 21, Industrial 7, IWM 12. Clearly, for our long-term benchmark internal tracking, we need to continue to use the NASDAQ. And this has been the case. Now, if we move to the 3-month benchmark, you will see that in green over there is the NASDAQ 100 and the IWM. So when we see these two benchmarks converging like this, and I love this part about StockCharts, you can have multiple indices and see how they vary over different time frames. You see the volume that's generated. It's really helpful for us as we decide which of the benchmarks to pay attention to more, which that builds into one of the many components that we have for selecting the stocks for our clients' portfolios. We do ETF programs, which in the last episode, if you go back and see that, we talked about, but this is back to our flagship growth program, which is CG or Capital Growth. So when I see the NASDAQ and the Russell this close, again, it's on a 3-month chart. Remember what I showed you previously, the Russell 2000 is still negative for the year, but relatively speaking, we're now paying more attention to small cap. Why are we excited about that? Because we firmly believe that we are in a long-term secular bull market. One of my favorite commentators on StockCharts, Tom Bowley, a big proponent of we are in a secular bull market. On my show last night, I mentioned to our clients, guys, we have a market explosion this week in the A, middle of a pandemic, B, not quite the middle of the pandemic, we hope it's near the end, but B, we're still in a recession until third quarter GDP gets proven to be positive, which it's going to be, but we're technically still in a recession. And then 3, you've got all this chaos from the election. And through all of that, the market is still performing well. So what does that tell me? We are in a secular bull market. So we're paying attention to the indices that are on fire the most, because again, that's what we want to do. If we want to beat the S&P for our client accounts, we need to use the indices that are outperforming. NASDAQ 100 all year has been our primary benchmark. We are definitely looking at smaller cap stocks, especially in industry groups that are strong. One of those would be clean energy, renewable energy. So that's been an adjustment since the last time I spoke to you, that we're weighing a little more how the Russell 2000 is doing in the near term. So let's look now at the weekly sectors versus the SPX. Now I have circled in green those indices which are the heaviest weightings in our CG program: XLI, Industrials, XLC, Communications, XLK, Technology, and XLY kind of buried there, but you can get the gist of it. So you might say, well, why are they in green? They're in weakening. They should be yellow. We're not seeing it that way. We're seeing these are the farthest to the right on the JDK-RS ratio scale. And yes, I have XLB in there. I can see that. That's not circled. XLB, pretty small sector. We do have some silver in the portfolio via SLV. Not really interested in materials companies at this time because the materials sector historically, and I mean historically over the last year, has not been a reliable performer. It tends to kind of oscillate and not go anywhere. XLB closely tied to the performance of the dollar. Really need to see who gets into office. It looks like Joe Biden, but we don't know that. The betting changed considerably in the middle of the night on election night, as you guys know. But we're still favoring these four sectors. I'll show you the exact blend at the end of the segment. Those of you that have watched know that I reveal our weightings. Have no problem doing that. But then as I look to the daily, so if I'm a little concerned about communications weakening, maybe heading into lagging, same thing with technology and consumer discretionary. If we look at this on the daily basis, I'm seeing communications looking pretty strong here. It's on a daily basis now. I'm seeing XLK, which, it got beat up in the previous week, now in lagging, but heading straight up. I believe that technology is going to head right into improving and then right back into the leading quadrant, and that's where we want to be. So I don't really see anything else there that interests me. Yes, I can see that XLU, utilities, defensive sector, is the farthest on the JDK-RS ratio, but it doesn't mean that I'm going to jump into utilities. I've got to see a little bit more movement than that. I use daily to see where we're going to be appearing, at least in my belief, on a weekly chart, the weekly RRG, over time. But right now, I'm not seeing any adjustments. So what I'm doing here is I'm looking at XLK and wondering, do I want to add to this? So the constituents of XLK are on the screen. And I got a big question mark there, and that's because I don't really see any trend. It doesn't mean that I necessarily want to lighten or sell XLK weighting in my portfolio, but I'm not really adding to it either. We've got some like CRM, okay, so that's Salesforce, pretty far over there, and arguably that and NVIDIA, the farthest. We do hold CRM and NVIDIA. And I'm not going to get rid of them. Not seeing a whole lot of energy there. MSI showing some energy, Hewlett Packard, but not really seeing much going on here, but not enough moving into the lagging quadrant or really big fat tails moving out of weakening to lighten up here. So I'm not going to do that. What I'll look at now is the XLY constituents, and I've circled this in green because we've got a preponderance of these moving into leading, staying in leading, some moving down into weakening, but everything's kind of shifted. If you see my hands, they're kind of shifted over to the right, which tells me that really that needs to be among my most highly weighted sectors. So I want to be looking for stocks as I trade the next couple weeks or so in this sector. So what happens when you put all this together? Well, we've got, here's our program that I showed you up front. We're actually, as I said, about 46% year to date if you include today's performance. But our current weighting as of the end of the day here is 45% in technology, 27% in consumer discretionary, 9% in industrial, 6% in communication services. And then we have a few stellar performances from other sectors, but no more than one. We do have one financial in there, but in general, still sticking away from financial because I'm just not convinced the dollar is going to be strong here. It was interesting the night of the election that the yuan plummeted around 11 o'clock or so when it seemed pretty certain Donald Trump was going to win. And then, of course, that reversed paths much later into the night or the early morning hours of November 3rd. as that got turned around. So that's where it is now, guys. Hope you give us a shot. Go over and find us at CB3 Financial. Subscribe to us and our weekly videos. I'm live Mondays and Thursday nights talking about what's going on in the markets. You can track us on Facebook. Also tweet a lot. The night of the election, I was tweeting frequently. So hope that was helpful for you. Enjoy doing these segments for your Daily 5 and stock charts. If you have any questions, reach out. Be happy to answer them. Continue to explore stock charts. We find it a great tool, especially for us, the RRGs. And just reminding you that at CB3 Financial, we don't just manage your assets. We become one of them. I'll see you next time on your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.